Welcome to Wyckoff Power Charting. My name is Bruce Fraser. I'm your host today. This is episode number 19, recorded on December 11th of 2018, to be aired on December 14th of 2018 and thereafter. And I am with our co-host, Professor Roman Bogomazov. Roman, welcome.
Thank you, Bruce. As always, happy to be here.
Well, I'm happy you're here. So we have an interesting topic today. We are going to talk about markets on the edge. Here they are. They're right on the precipice, on the support areas, and we want to know, can they rally from here? Is there the potential for stocks and the stock indexes to go up? So let's get started. So we are going to primarily look at the triple Qs, which is an ETF for the Nasdaq 100. And here we have 2-point and figure charts. So let's turn our attention to the chart on the bottom right, which is a one box reversal point and figure chart. And I love point and figure charts. They are just such a unique way to look at stocks and look at the market and see what the potential is. They just kind of give us, I think it gives us like superpowers, like X-ray vision. So anyway, so here we have a distribution structure that we can see that occurred in 2018 in the triple Qs. We can see that it completed, and then it went into a downtrend of sorts, a halting downtrend, where there was a series of lower highs and lower lows that have occurred, and we can see the potential here for a longer term decline that goes down to the area of 146, 138. And so there is the potential for stocks to go lower from here. Now, they don't always have to fulfill these counts, but we want to keep this count in mind because it says that there is the ability to generate lower prices from these distribution counts. So, but let's turn our attention up to the chart on the top left, and that is a more of a trading count that we've done, and this is a traditional scaling one box reversal, and we can see here there's an accumulation count that worked really well. It came within one box of fulfilling the larger count, so it went up to 184 with an ultimate high of 186, which is one box higher. And then we can see that there's a trading count here, a distribution count, and lo and behold, we fulfilled it. So this count has been fulfilled. We'll notice this. At the point at which this count was fulfilled, the triple Qs have attempted to find a bottom. And it appears that there is an attempt here to build a cause for another move. And so we want to explore that today. Roman, what are your thoughts?
Well, I think that the main message today for me is that even though we're seeing attempts to bottom out, we have to look at what kind of rally we're going to have here. And then with that in mind, we also have to think that if this rally is going to go and then fail, then there is still a potential target down there below the January, February lows that we could potentially see. So it's a very interesting spot, Bruce, where we're seeing short-term attempt to reverse, and we just have to see what's going to happen next.
It sounds like we need our Wyckofian superpowers to be able to weave our way through this market environment. But the interesting thing here is that this count, the smaller distribution count, which is a swing trading count, has done a nice job of demonstrating that there's a period of congestion here, and sure enough, that's exactly what we've gotten. And the question is this going to be redistribution for another decline that takes us to the larger count below, or is there the potential to have maybe a rally upward into the trading range, maybe to the top of the trading range? So Roman, let's keep going here and show, what are we looking at?
So this is the vertical chart for Qs, and we've talked about this for a long time. One of the interesting analogs for us is always that January, February up to the main absorption that we uh, have experienced, and we've seen the effect of this absorption in the next rally. And then obviously, again, a change of character, and now we are in the consolidation. So one of the things here on the longer term chart for us to notice is that specifically with Qs, we are creating a higher low relative to the lows in February and May. We are also seeing how the volume signature, even though it has increased substantially on the lag to the downside, but during the consolidation, we see how that volume signature is going down. So as the volume goes down, we would be thinking that supply is going down and also demand is going down. So it's a really good sign that supply is going down, because it just tells us that there is some absorption there, or there is an exhaustion of the supply. Having said this, Bruce, this is what bothers me a lot. It's the poor demand, at least at this point. So we need to see what kind of rally we're going to have here. Are we going to have more of the technical rally that is just a bounce up into the highs, maybe into the upthrust highs right here? Or are we going to have the rally that's going to have a really good lift behind it and a good breath behind it?
So let me ask you this, Ramon. On this prior rally that occurred in mid-November, we can see that the volume is not particularly high on the rally days. And then there's this spike that comes on this big volume bar or big price bar that precedes the highs. Is this the lack of good demand that you're talking about?
Exactly. Yeah. So even though we see that the rally looks good, but what is the reason for this rally to look that good? It's only because supply has been diminishing. And now, with that diminishing supply signature that we see going into the lows here, we're expecting that the rally is going to happen even if demand is going to go down. But we have to have the rally where we're going to rally and we're going to see finally the increase of the demand, which would be the evidence of institutional buy.
And so that's really important to script out what we would need to see to extend our bullish scenario would be to look for what kind of a rally, how it rallies from here.
Mm-hmm.
So, okay,
And
interesting.
also another idea here, Bruce, is conventional technical analysis, targets that we could discuss with the bias that we have. It's kind of very logical that we could have one-to-one relationship of the next move to the downside. Let's say some catalyst comes and we have so many catalysts on the horizon, the tariffs, oil, Brexit, Fed. I mean, all of those things are still ahead of us. And I could see, Bruce, how a lot of institutional money managers, they're just in cash. And, as I talk to some of my institutional money managers friends, majority of them are in cash or in the majority of the cash. So there is a waiting game that is happening right now.
I believe, and we've said this in the past, that institutions have been very surprised by the bout of weakness that we've had starting in the fourth quarter at the beginning of October. You can see that in the volume. There's a tremendous amount of volume that has been unleashed in this decline. And now you have indexes that are at the price point that they started the year on, or they're actually down on the year. And so this has been a big surprise to institutions. I do believe that the end of the year is really important and that we could actually see more selling or continuation of selling into the end of 2018, and that it won't be until we get into 2019 when that supply has really been exhausted and the market has the potential to maybe lift a little more easily.
Mm-hmm.
So I'm thinking the end of the year is really important this year, just because of this huge trading range that we've been in.
And imagine some catalyst happen, negative reaction to that, and then we're definitely going to have a lower than the low in November, and possibly even lower than in February and April, which is being shown to us on your PNF chart.
Yeah, see, I'm looking at this period from late October to the present, and I'm seeing something that looks as though it could be potentially accumulation, and that there could be a count in here. It's unfinished, but I can see the potential for a count that could actually drive prices maybe up to a higher level, maybe up to the resistance line. Oh, and here we have a point and figure chart.
Yeah, well,
So,
let's talk about those counts. So, Bruce,
yeah.
where maybe you could just like tell us a little bit about the structure itself, because on the PNF it looks slightly different. And what does this mean? You know, the minus sign of
Yes.
strength.
Yeah, so this is a intraday chart. This is a 60-minute chart, meaning that the data is 60-minute data. And we're using a different methodology. We're creating a scale based on average true range. And this is available in the point and figure charting engine at stockcharts.com, which is excellent, by the way. And so we have a scale of 1.68 and one box reversal method. And we use these charts for trading purposes. So this is an excellent type of point and figure chart to use to develop trading counts for shorter and intermediate time horizons. So here we can see that the blue shaded area represents a segment. We count point and figure in segments. And so here we can see a count that takes us up to this target zone 1, which is 173.04, 174.72. And this is from the low test area, which is the first entry on this in this blue shaded area, which is at 159.60. So this is a swing trading count, and get this, it takes us right to the top of this trading range, minor trading range, that's in the bottom part of the big trading range. And so we can see that that makes a lot of sense, that count does, and that we have the potential to go up there. And this might be the rally that Ramon is looking for, where we start to get good spread, expanding volume, and a robust rally that shows the demand is starting to come in a quality way. So that would be segment 1. Now, we're calling this one area up a minor sign of strength. And so you can see that there's a really good quality rally. Look at the entries in this column, that we have 8 entries in that column that takes us up and slightly takes out the top of this downsloping trend channel. And so thereafter, resistance does come in and puts it back into the channel again. And so, but this is a nice little sign of strength, very good volume. This is, and we can see this really well on the point and figure chart. And now we can see that it's attempted to come back down, but look what happened. It came down, made a higher low. So this is a test of the low that was made around November 16th area. And so that potentially completes segment 1 and puts us in a position where we can rally back to the top of the trading range. Ramon, tell us about segment or target zone 2.
Yeah, we should be cautious here, guys. Well, we are in such an uncertain environment where, to us, any catalyst could move the market sharply up or down. So therefore, you have to be cautious in your trading. You have to do a lot of, trading counts and swing trading. So this first target is really good, swing count for us on the intraday basis. And then the second count is just the extension of the first one. It's the idea that if the price goes to the first count and we are indeed experiencing a sign of strength rally, the rally that's going to outperform even the previous rally, and it's going to maybe create one additional box or 2 additional boxes and overcome all of these highs in the same column, that would constitute that sign of strength. And then the backing up action, if happens in a bullish way and we don't collapse again as we have done before on the intraday basis, but if the price is going to continue, then we could say that the second target is going to be the one that we would look at. Also want to kind of notice here, Bruce, and you've mentioned this, how the change of behavior is happening. And look at this rally right here with this volume signature. Look at this rally right here with this volume signature. You mentioned all of this. So we're seeing how the bullish activity is increasing. And then look at the supply in general off the top. So it's going down, so that's a great sign. But on the last attempt to go down, which creates a high low, this is a slight increase in the effort to the downside, and then the result to the downside is diminishing. So this is a short-term bullish sign, at least a short-term bullish sign for the target zone number 1.
Nice. So we have the potential to get, with the target zone 2, to get up to the top of the trading area that we have been in the year in the Qs, and the Qs have been among the strongest of the indexes in the year. So this is a possibility, but notice how we're chunking down our time frames where we're able to position, but we want to be defensive. So we position with smaller position sizes, and we can keep our stops closer and closer to the danger zone. And so this is a way for us to manage risk in this, call it being on the precipice, and still have the potential to participate in a rally if one can develop. And we just don't know at this point, but we have some reasons to be encouraged.
Well, even though, Bruce, short term, we see some kind of signs of an attempt to rally. We're not calling for the big rally yet. We need to see signs of the confirmation. But if we were thinking, more of the bearish scenario, you've shown to us this transportation average, Dow Jones transportation has very interesting bearish elements. So what are those?
Well, first of all, notice this big trading range that we've had going back to the beginning of the year, and very big sign of weakness after a rally from November 2017 up into the beginning of 2018. So right after the beginning of the year, before the market, the broader indexes, transports became very weak and set a range. So look at this, climax, automatic reaction, sets a big trading range, and look at this trading range informs the activity in the transports for the year. And so this is, tell me that this isn't just the most useful information. And so now the thing about the transports is there's all this talk about a strengthening economy. Well, the economy runs on and is shipped by transportation. So if the economy is getting better, then the transports should respond and be acting quite well. So here we have a situation which we might actually deem as a very large distribution structure. A couple of things that we worry about. One is the February low sets an important low and produces a rally. Well, now we come all the way over here to October and notice this very sharp decline on volume, ease of movement, big price decline, goes down, makes a slightly lower low in late October, and then is followed by a rally that can only go up to approximately the midpoint of the range. There's a little bit of a climactic surge there in that upthrust, and then notice the response to that upthrust. Very high volume, ease of movement, and then another lower low. So now we truly are on the precipice with the transports. And so this is an interesting place, and we're going to want to watch very closely how the transports respond to being at the support level. And so there's a very important support level at 10,100, and the ability to be able to climb back above it and do it pretty quickly. This last low bar has a big tail, so that could be evidence of there being demand interspersed with that big selling surge, and that there's support there. And so let's see how good the rally is that comes in the transports, or if there is one at all here, because this will tell us whether or not we're completing distribution And when you complete distribution, you follow that with markdown. So we have a big markdown phase. And so this is going to be most important to watch and to see how well it responds to a rally after this very steep decline. Ramon?
Yeah, this reaction is really, really bothersome.
Yeah.
And as we look through the whole trading range, where else did we have this type of the reactions? Not the initial reaction to the downside that we've seen in January, February, and October, but more of like a secondary reaction. And we probably, you know, as a test, we're probably thinking of reaction like this that had some volatility, but look at the levels of the supply. They're not that great. Look at this reaction right here. It starts with some selling, but then everything subsides. So probably the best analog that I would think here, Bruce, you know, is this type of the reaction. And yet, again, we don't see as much supply as we've seen off that upthrust. And that's what's so bothersome. It's just that not only supply is increasing on the overall volume increase, but we also see that the way how it moves, the down spread is increasing, so which is bearish. And then we also making the new lower low, whereas here we're making the higher low. So there are quite a few things here that are not that great looking. Yet I agree with Bruce. If the price quickly would come back above 10,100, then that would look at least short-term bullish and would suggest that we would be here in the consolidation and we could go through a phase like this where we just consolidating for some time. I think that would be the most bullish thing, you know, that could happen here after such deterioration.
We're kind of running out of time, but we have some free offers for you that we're going to show you at the end of our program. But Ramon, just go back to the transports for just a second. Let's just give them some ideas about what to look for. If this is a truly bearish structure and distribution is complete and it's already in markdown because of the way that it cascaded lower here, it's now under this key support area, which is the solid line that is right above at 10,100. Well, there's a term we use in Wyckoff, which is called being under the ice. And if there is ice above, which is that support line, there will be a rally of very poor quality that has very little lift in it, which shows that there's no good demand, no good support by the really big institutions that would buy the transport stocks. And so Ramon has drawn in what that might look like. And so very weak, lacks good quality volume on the rally days, and it has an inability to be able to get above and stay above that key support line. And so if we see that, but if we also see the opposite, which is an ability to get above that support line and do it pretty quickly and with ease of movement, then that would be encouraging for a bull case. So just two things to look for as you follow the transports from here forward. Ramon?
Yeah, let's look at some of the candidates. We always want to give you guys, you know, different looks because this is the market where you could trade both on the upside and on the downside. We still have not confirmed the distribution as a big bear market. Only when we commit to the downside on all of the market charts below the lows of January, February, then we would be saying that, yes, indeed, there is a confirmation that we're in the bear market. But even right now, you could look at different stocks and you could profile them in a specific way. So for instance, Bruce, this stock here, Choice Hotels, it looks like we had a major sign of weakness off the September highs into the October. It committed below the level of support quite dramatically, you know, and went down quite below that support level. So that tells us that there is an ease of movement to the downside. There is some selling that is happening in this area. We see the consistency of the volume signature here. The rally that comes up is to 1/2 of the point, and then off another attempt to go up, we're selling, and we're selling with the increase in supply signature. Is this, Bruce, going to be like a very common conventional distribution pattern that we would see in the markets.
Absolutely, and it is a conventional distribution type structure. The one thing is it's a pretty good rally off that major sign of weakness, which we expect to see a good rally into a last point of supply after important weakness. Now what we want to see, because there is ease of movement on the decline that followed the LPSY, would be that ICE phenomenon, where there's an attempt, it may come from lower prices, but an attempt to rally above a prior support. It's a very poor attempt and has an inability to lift and get back into the trading range. And that would be an important warning that this is completed distribution and that there's the potential for lower prices ahead. So this is a very large structure. And that would be the thing that I think would be most interesting, is that it is so large. So, Ramon, what else do we have?
One last thought here is, in the distributional structure, we usually look for the increase of the volatility, and we look for the supply to increase, or rather the effort to the downside to increase. And we kind of see this a little bit, through the whole volume signature. And on the background of the increasing effort to the downside, we want to start seeing lower highs and lower lows in the distribution, and that's kind of like what's happening here.
Mm-hmm.
Well,
Good
what
point.
about
Really interesting.
What about the stocks that actually exhibit some bullish characteristics, Bruce?
Well, in this case, Twitter's pretty interesting, actually. So you can see that Twitter had a really good run up into mid-year, and then right at the end of the second quarter, there's an attempt to sell stock, and it stops the uptrend with a couple of big breaks on volume. But thereafter, it shows that it wants to really trade sideways, not really participate in the big declines that have been coming in the broad indexes. And then notice what happens. There's a good rally that comes at the end of October with a good jump that takes it up to this minor resistance area. And then when it attempts to come back down again, notice that the attempt to come down is halting. It retraces about half of the gains that it made off the October low up to the late October high, and the volume is generally not expanding. So there is the opposite of what we just saw with Choice Hotels. And so we see that even though the market Twitter can trade down some from here, it's halting. There's a lot of overlap, inability to follow through, and then it turns around and responds by rallying on better volume and getting up to the resistance line. So it's actually bucking the trend of the market here. Mm-hmm. So your thoughts, Ramon?
Last thoughts here. Look at the analogs. One trading range, another trading range of the same bias. Change of character, attempt to rally. Change of character, attempt to rally. The next subsequent lower low, so it looks the same. And then we go through the period of absorption here. So here's that absorption right here. So now we just have to confirm the breakout. And if we do see that, then most likely we're going to retest the highs here. Bruce?
Join us for our January 2nd Wyckoff market discussion, where we do a look ahead for 2019. It's free. We would love it if you join us. On January 7th, Ramon does his first class for his Wyckoff trading course. And so please join us for those two events, and we will see you. Also, we will not be recording the next two weeks, and so we'll be in reruns, and we will see you thereafter.